Today, again, we are here to talk about Nifty, Bank Nifty, and the intersector analysis. And today's been payday for a lot of people. Nifty has given a fantastic turnaround, very strong rally, asserting our view that we are going to see the level of 25,000 very soon. But I want to take you back to the charts and I want to assess the correction that we've seen the last week, because that correction has been painful because of the budget. It was volatile. And because of that, lots of stop losses did get triggered in my portfolio, my client portfolio, my recommendations. However, we were able to enter back. So I want to discuss with you how and why did I have the conviction to re-enter back positions when stop losses got triggered in the face of extreme volatility. And we will do all of that from the perspective of swing trading specifically. So for that, first, let's start with Nifty analysis. And I'm going to take you to the 3-minute time frame of Nifty with a screen share. So now you're able to see my screen. So what I am noticing here is that you see all these thin white tangles that I've drawn. These are basically support resistance, intraday, you can say support resistance levels. And today the market has opened with a gap down, but it has crossed all resistances and closed nearly 2.6% higher from its open price. On this 3-minute time frame, what we are seeing is that yesterday when this consolidation was unfolding, the Nifty was resisting the level of 6 on the RSI, and this has been happening since 18th of July, that is since Thursday of 1 week back, right? But one interesting thing that happened here was that on the downside, Nifty was also at the same time respecting the level of 40 to some extent, also gave a positive divergence here. This basically indicates to us that a higher time frame is undergoing a trend correction. That is why the lower time frame, which is a 3-minute time frame, has become bearish, not outright bearish. So that is the signal that we got here. And this lower time frame analysis actually helps us assess the market from a very zoomed in, from a very short term period analysis. Right? So today, once the R had sustained above the level of 60 over here, the market continued to rally fantastically. This signal of confirmation actually came before closing yesterday only that the market is going to continue into a bullish trend. And today we saw the realization of that. And also, mind you, by the way, yesterday was the monthly expiry of Nifty future contracts. Why is this an important piece of information, even if you are a cash segment swing trader? It is important because typically after market futures contract expiry, especially monthly expiries, the market has a tendency to give sharp reversals from the trend that was being pursued early on, because this basically shakes up all the traders. Contracts expire, they need to open new positions, so on and so forth. So it spurs activity in the market. So a monthly contract expiry, even if you don't trade in FNO, is something that you should be aware of. Coming to the 15-minute time frame, now this rally was absolutely no surprise as per the 15-minute time frame, because a very beautiful positive divergence had emerged on the 15-minute time frame, right? If you observe the volume activity here, the volume activity also on the day of the budget gave us strong indications of continued upside. How did it do that? When the price picked up from the support of 24,080 all the way to 24,500, the volume increased. So there were two strong bullish signals near the level of 24,100, which told us that this bullish momentum is going to continue. Another thing that you can notice here is this blue line. What is this blue line? This blue line here is the 20 days exponential moving average of the daily time frame, the 20 period exponential moving average of the daily time frame. And if, as you can see, Nifty has respected this pretty well. Historically, if you see, barring this 4th of June extreme volatility, during this uptrend, ever since this uptrend has begun on the 13th of May, what I have noticed is that this level, this 20 EMA, has been respected very well by the market. So we saw an uptrend there. And now we see a continuation. Now, the very first resistance that I'm seeing is this line over here, this 25,000. Why am I so adamant about 25,000 being an important resistance? The answer for that comes from this drawing tool. I'm going to increase the size so you can see it better. So what is this drawing tool? This drawing tool is the Fibonacci projection drawing tool, right? What it does is I have taken this tool and I have projected it on the waves that have unfolded in this bull run so far. And if you see within this bull trend, the highs and the key lows, the main support resistance zones that have occurred so far actually coincide really well with the projections of the very first wave of this entire rally. The 2x rally point of this Fibonacci extension tool lies around the level of 25,000. If that is not enough, I also drew the Fibonacci extension, leaving out the extreme volatility on the next wave of uptrend. So it started on 31st May and it ended on here around 21st. And then we saw some correction there, right? If you take into consideration that entire correction, the 1.27x of that rally resistance level also lies here. This is the rally that we have seen since 21st of June, all the way to the top of 24,800. And for this release, 0.61.8% extension lies here. So this is actually a very good confluence point for major Fibonacci ratio extensions, and Fibonacci plays a big role in the stock market. So I think this 25,000 therefore becomes a very important resistance zone. Typically, when a stock or when an index is in the all-time high region, these tools and combination of confluence levels tend to become important resistance zones for the underlying, which is currently trading in an all-time high zone. Moving on to the 75-minute time frame, the volume activity is very important that I want to draw your attention to here. So today's rally that we've seen, firstly, it was very strong, very one-sided rally. The volume activity has been phenomenal. Last time we saw this kind of strong volume activity again when the prices of Nifty were still rallying. That's when we saw the strong volume activity. Whenever the price of Nifty has gone into kind of sideways consolidation or downside activity, we've seen the volume dry up. So return of volume against upside is a very good signal, and that makes me even more bullish for the market in general. Coming to the daily time frame, so the daily time frame is actually my favorite right now because the daily time frame is indicating to us that a very strong rally is still underway. And I really believe that after the 4th of June, a new leg of rally has started in the market. And this was a significant correction that we saw. And now this rally can continue. So I have not yet calculated the next level of resistance, but to me, it looks like 25,000 is going to get breached, and the level of maybe 25,360 can become a important resistance zone. So I will just round it up to 25,350. I like to keep it in rounds of maybe 25 or 50. So 25 is where we can expect. Nifty analysis, it's always advisable to start from largest to smallest time frame. But since I analyze Nifty every single day, I do the analysis from smallest to largest time frame, because if you're still new to technical analysis or market analysis as such, if you don't start from the largest to the smallest time frame, there is a pretty good chance that you're going to end up building a lot of biases in your analysis, which is not a very good idea. So now I'm going to move on to the analysis of Bank Nifty. And in the meanwhile, I will request you guys that if you have any questions related to swing trading or market psychology or just trading in general, feel free to comment that. But if you have specific stock queries for me, you will need to submit the stock request form. You need to fill up the stock request form because it's a SEBI requirement that registered analysts keep a record of all the publicly discussed stocks. So I am sharing the link of the stock request form in the comment. Make sure that you click on the link and you fill that up. If your name is not there, I am not going to entertain your stock request. However, the members who joined us on Zoom, they have already registered with us earlier, and we will take their questions, their stock queries, or any questions that they have on priority once I'm done with my discussion. So let's move on with the chart of Bank Nifty. I have the daily time frame, so we'll begin the analysis there. So 51,900 was a very important support. And when that got broken, that was a signal that we can expect some more downside in Bank. The next support was around the level of 50,900, which also got broken. That's fine. But the important support of 50,000, that thankfully has not been broken. I don't think it is going to get breached anymore because slight recovery seems to be coming back to the index already. Coming to the 75-minute time frame, 75-minute time frame had displayed a really nice negative divergence. And last week in the market outlook series itself, I had said that banks are not a very attractive candidate for trading this week because you can expect downside, and banks did decline quite a bit this week. However, now that the Bank Nifty index has come to the level of 30, turned up, and the volume pickup has also returned on the index, my expectation is that recovery in banking stocks can also be seen soon. Now coming to the 15-minute time frame, 15-minute time frame again so far still continues to be subdued. And unlike the 3-minute time frame of Nifty where we saw mixed signals, over here the 15 minutes RSI has moved into a proper bear range, I would say, because it's been breaching the level of 40 more significantly. So that is one thing that concerns me a little bit. However, if you look further, one time frame lower, 3-minute time frame has already turned bullish, but then 3-minute time frame is only enough for what? 1 or 2 days of analysis. So I think this level of maybe 51,900 to 52,000 can pose as a bit of a resistance on Bank Nifty, something that you should look out for. For me personally, on some banking stocks, I have entry orders set, but I don't think the support levels have come yet. So my entry orders still stand. Those are GTT orders, and I'm not rushing into buying those stocks immediately because I think maybe in the next week or so, an opportunity can come to make better entry. So it's highly likely that this recovery that we are seeing may see resistance at 51,900 and give another leg of downside to test the support of 50,000 or maybe 49,900, right? I am not very confident of this rally, primarily also because here the 20 EMA on the has been breached in Bank Nifty. So I'm expecting that slightly more correction can come. And if you notice this green line here, this is the 100 EMA of the daily time frame again, which kind of is very close to this 50,000 level. So maybe in the next 1 or 2 weeks, we can see a little bit more correction in Bank Nifty. So you want to be careful with your banking picks in the next couple of weeks at least. Okay, with that, we will now go on to our indices chart. This gives us a very good comparative sense of all the sectoral indices in the market and how they have done this week. So I like to look at this chart every single week. So while it loads, I want to invite you to my Telegram channel. If you want to connect with me, if you're interested in swing trading, if you want to learn chart analysis, or if you just want to consult an expert to guide you with stock market journey and so on, you're welcome to join my Telegram channel. And in my Telegram channel, you can see this option, connect with me. I am pasting the link to my Telegram channel in the comments. You can either click that, or if you have the Telegram app, Go on the app and write trade with Kavita. Now, when you write this, you're going to see a few options. There are lots of fake channels, so be careful. Make sure you're looking for this gradient background face. Change my DP to stand out from the copycats, right? And you'll see a lot of posts related to my weekly market lives and my quizzes and my market commentary. Right. So every day I post this market commentary with what I think is going to happen to the market the next day or next few days. So if you want to get a sense of what the charts are saying at the end of every day, then you might want to join my Trade with Kavita program. And also, if you want to avail my services, time to time, I keep posting about what services or how to connect with me and how to avail services. So that is something if you're interested in. So now that this has loaded, let's see, since Monday, if you see, pharma and healthcare have come to the top. Last week, we discussed that pharma and healthcare looking very attractive for continuation in the rally, and they've given some correction and starting to give positive divergences. And we see fabulous rally there. Auto sector, I think, has juice left, but I'm waiting for a more attractive entry point there. It continues to rally. We've been talking about IT since few weeks now. We've all participated in this rally together. My Trade Together program's performance has been elevated because of energy sector. I think again, new fresh entry opportunities are there. Some of the stocks have already run up, but there are also some fresh entry opportunities and selective picks there. FMCG and consumption are not my top picks for swing trading, at least in the next few weeks. I think not because they are bad, but I really think that there are way better opportunities in the market because of the budget, because of elections, because of some global cues. I think the market has received like a bit of a shakeup and new sectors are now coming into play. And I think sectors of yesterday might be falling out of favor with momentum. So wherever you've seen a lot of rally, you might see a lot of consolidation now. So you want to be careful and don't make the mistake of buying stocks after the rally. Wait for support points and look out for strong momentum reversal signals, then trap the prices. If you want to learn all of this thing from me, you can just enroll for my training program. But coming back to this, I think realty sector again is one. So this week realty has been down, but I am looking for entry points there. So I already have buy orders, lower support levels. I think this correction is temporary. And if I can capture these stocks at attractive entry points, then maybe in the next month I can book some attractive profits there. So realty sector is something that I'm not recommending purchases in immediate, but I have buy GTT orders set there, which I expect to get triggered in the next week. And we've already talked about banks, that over there also a little bit more subdued activity to be expected. Metals and PSE, I don't really have much of an opinion. And same on infra. I don't want to comment on that because it's not always possible to tell whether something is looking bullish or bearish. Sometimes it's just in a very lull state, so it doesn't really make sense what's going to happen. You have to wait for some clarity to come back on the charts. With that, I come to the end of discussion that I had prepared for you, and now we will move on to the queries which our Zoom members might want to ask. I can see we have around 8 to 10 people with us on Zoom. If anybody on Zoom has questions, feel free to raise your hand and I'll ask you to come off mute and you can ask your questions. In the meanwhile, let's see if any of the audience members has filled out the stock request forms. While I open the stock request form, I have a genuine request that if you appreciate the content that I'm bringing to you, the analysis, technical analysis, knowledge and stuff, do give a like to the video, share it along in your groups that have stock market interest or analysis interest, and do subscribe to my YouTube channel. Recently, I crossed, I think, 6,000 followers and I'm trying to increase that. So if you want regular content, my YouTube channel is something that you could find useful. So today is the 26th and we do see members having submitted some queries for me to help them out with. And the first one I'm seeing is Dharmender Singh. He's asked for the analysis of Sanofi India at 6,400. He's bought 4 quantities and he wants to know if he should add more. So let's see, Sanofi India Limited. So this is the chart. Extremely volatile, has given a very strong rally, but since my analysis looks a little outdated and I could also see that my previously stated target was achieved, let's draw some fresh trend lines here and clone them to get a trajectory of this stocks. I think this has very strong resistance close to the level of 8,345. So if you want to make a fresh entry, you can do that from a short-term perspective. I wouldn't recommend a long-term entry at this stage. And your stop loss would be around the level of 6 roughly. This previous rally has had pretty strong volumes, pretty strong momentum. Considering that there is this ancient sort of trend line passing through here, my conservative target for the time being would be around the level of 8,300 for Sanofi India. Satvik is asking for the analysis of Affle and he wants to know the possible target in the stock for the next maybe 5 to 11 months. So let's take a look at Affle. I can see the RSI here looks pretty bullish. And I have personally been waiting for this range, but I want to delete this and I want to take this right here and I want to draw some resistance So we have done some trading and the stock has now come very close to a old resistance level. So very strong trending stock, but has been stuck in consolidation since March of 21. But I don't trust this rally much. So I think it's not yet ready for a breakout. I think the resistance of 1500 might hold, especially considering the 75-minute time frames RSI showing a major negative divergence. So I would expect some correction here at least. And I can see support being offered around the level of 1270. So I think that would become a potential re-entry point, but I wouldn't recommend holding Apple right now considering the chart setup. On Zoom, Ashish is asking for the analysis of Hindustan Petroleum. Hindustan Petroleum, let's take a look at this for Ashish, who's with us on Zoom. So I can see that Hindustan Petroleum is a really nice trending stock, momentum mover, and it has given one strong rally, given an ABC correction. And this looks like the beginning of a very fresh, very new trend after testing the 100 EMA of the daily time frame with volume backing. If you've not written what you want to know about Hindustan Unilever, so I guess I'll just do a general. Tell me. Okay, in the next week, right? So I think what you should do is, instead of buying it right away, set a buy GTT order at around 365, because the price is a little bit heated up right now and it's still in a consolidation zone. So set two buy GTT orders, one at 365 and another at 347. So what that will do is it will help you bring down your average cost on the stock and then maintain a stop loss at the level of about 322. That being said, your target on the stock would be around 455 roughly. So this would give you a rough risk reward ratio of 3. So this would qualify for a trade, in my opinion. But seeing the historical trajectory of the historical trend in Hindpro, once this trendline resistance gets breached, I would expect the rally to continue, but it's not possible for us to predict that right now. So this staggered entry will give you a better average cost. Yeah. So that's for you, Ashish. Now for Sahil, you want me to look at Bajaj Finance and you want fresh entry level. So let's take a look at Bajaj. So what am I seeing? So Bajaj Finance is in very strong consolidation zone, and the underlying trend is basically still pretty strong here. If I just hide the drawings for a second, see, Bajaj Finance is the kind of stock that's very good for long-term holding, but it has also very strong resistance around the level of. For a long-term holding, I would want to see the stock kind of break out above that. And from a short-term perspective, I think it's starting to give a bit of a turnaround here. What I am not very comfortable is that the volume pickup was stronger on the downside than on the upside. Plus, on the 75-minute time frame, the RSI has broken below the level of 30 in the recent correction. I am not very convinced for a fresh entry at this stage. It looks like a little bit more downside can be expected, and the daily time frame also is in a bull trend correction mode right now. So the very minimum support that I'm seeing on the stock is coming in from this level of around 62, 6100. And the second support zone that I'm seeing is around 5300. So I think for Bajaj Finance, maybe I would wait off for a little bit before making fresh entry here. So that's for you. And Ronak on Zoom is also asking for analysis of Glenmark. So you have an entry somewhere around 1303. And what should be your stop loss here? So the first thing that is jumping out to me is this tiny little negative divergence on the 75-minute time frame, which, considering the very strong trend, doesn't mean that the stock is going to absolutely go down, but there is a good chance that it can come back to retest the support level around this level, 1380. Right now it's around 1440. So the stop loss that you want to maintain a stop loss below that support. So around 1345 is, I think, where your fair stop loss should be. And as for the target, now, like I said, Glenmark has a very strong underlying trend going on, and it also has this. So it's around the all-time high level right now. So what I'm going to do is, on the daily time frame, use a Fibonacci extension tool and just mark the rally and the correction to get a projection. So 1.618 is pretty much achieved. So I think 1721, because that also is very close to the resistance trend line here. So I think 75 target is what you can expect here, but it's very important to trail your position as you go. Okay. Right. So let's take a look at some of our stock request submissions. We have Satvik asking for Apple, we've discussed. Mrityunjay is asking for Bank of Baroda. He wants to know the probable target. He's joined us on Instagram Live. Bank of Baroda. Thanks for filling up this form, my friend. Let's take a look at Bank of Baroda. Like I said, banks maybe wait out a little bit more. Bank of Baroda, however, has, so this is the support that I'm seeing on Bank of Baroda. So I would maybe wait for an entry around the level of 243. It does look like it's pretty close to the support, and the underlying trend is also at the same time really, really strong here. But you want to wait for thoda or a little bit more confirmation before you buy. But I think this around 239 to 243 is a pretty good accumulation zone. Stock is already very close to that. If you can do that, then 322 roughly becomes a pretty attractive target zone, and your stop loss, you can keep a tight stop loss here because the underlying trend is very strong. So around, I think 232 would be a good stop loss to maintain on the stock right now. So that's Bank of. And so on Zoom, we have a question. We have a question from Mohit. He's asking for the analysis of Indian pesticides. So let's open IT Indian Pesticides Limited. And okay, so observations. Very volatile stock, like super volatile stock. What happened here? Makes me very uncomfortable, but okay. See, the daily time frame is showing a positive divergence, but personally, I don't prefer trading in stocks which have this much volatility here. However, the risk reward ratio also for IPL participation at this stage is pretty attractive. I would say you can maintain a stop loss around the level of 196, maybe 195, maybe even below this low. So take it 190, and you can buy this here. And I would expect this resistance to get tested. So I think 263 can be expected. However, with respect to the overall exposure of your portfolio, I won't recommend you to expose more than maybe 2% of your capital here, because the risk reward ratio is not more than 3. So fresh entry, I wouldn't recommend. The absolute stop loss is pretty big. Or what you can do is you can wait for the stock to move above the level of 222 and see if it sustains. If it does sustain, then set your stop loss at around 199. And then you can enter the stock for a target of around 261 if your risk reward ratio exceeds the level of 3. Ronak has sent me a message on Zoom, and he wants to know, is there a new entry setup forming in Jain irrigation system where previous resistance is acting as support? Is it? I don't know. Let's see. Jain irrigation is a stock that I haven't studied in quite a while, so this will be interesting. So let's reset, zoom out, get a sense of the trend unfolding. Extreme volatility back in 2020. Very difficult to draw the trend lines here. If anything, I would say fine. If I take this as a strong bull trend that was unfolding, and if I use that same here, I just want to see if it makes any sense. Kind of not. The chart structure itself is just so weird. It's making me uncomfortable. That being said, I wouldn't recommend taking fresh position. Also, it had shown a negative divergence here, which has been corrected. And how much did it get corrected? Around 32.8%. So that looks like a wave 1 correction. But this trend line does make some sense. I think this is very volatile. Even if you do enter the stock here, I won't be able to recommend a bigger target than 91, which is around 18-19%. But again, the stop loss would have to be below this low, around 60. So that's 8% against maybe 24%. So yes, that is a risk reward ratio qualifier, but the overall chart structure makes me quite uncomfortable. I would not personally prefer to make a fresh entry in the stock. What could be done, however, is set a buy order at the level of, and then set your stop loss near the level of 66.5. If the stock can yield and give you this entry level, then you can hold on to it for a target of maybe 90-91 rupees. Personally, to me, that would make most sense rather than entering the stock right away. I would like to see it come back to the support level. So let's take a look for Nikhil, who's joined us on ET Market live stream, and he is asking whether he should sell R at 606. He's bought it at 606, or whether he should keep holding. So RVNL, I've done detailed analysis recently, so I don't even need to look at the charts to tell you. But I think RVNL has exhausted its rally, and I think it can go into consolidation for a while. So any chance that you get, you should consider selling the stock, because this stock is a very dangerous stock to make a purchase in. However, this railway sector is a sector where rally comes very swiftly. All retail traders, lots of retail traders get trapped, and then they have to sell either with losses or incur huge opportunity cost. So I think you've bought this stock on the wrong side of the trend, and you don't want to continue to hold it. So if you get a bounce back in the next few days that we're expecting some rally in the market, you should sell it. And you should also look out for the stop loss at the level of 5p. If the stock starts going below that, I would suggest strongly that you get out of the position, because I am expecting around 20-25% downside in RVNL from the current market price. Yes, Sahil.
And I think so I have been associated with you for almost 4 months now. I would say that return fee would be like double the returns that Nifty would have given. I definitely respect and appreciate research which you put in, the hard work that you put in. But I think more inside that the way you do things, the methodical ways, the systematic ways, how you set the stop losses, how you increase them, how you increase targets, how you make record of everything. So I think that's really helped
Thank you. Thank you. I have been doing this since 12 years, and my focus is on my system, on my process. And even when I started my company, EXP Invest, my focus has been on creating systems for retail traders as well who choose to get associated with me. Because at the end of the day, the market has so many moving parts that if you don't have a system, you're just going to get lost. Irrespective of what the market does, I think the backbone has to be a strong system, and there is no finishing line for this. It's a continuous improvement, an iterative process, and commitment, consistency, discipline really at the heart of being a trader. So thank you. Thank you for acknowledging that. Really makes my day. So let's see. So we have Rajat Singh Ji also joining us on Zoom, and he's asking for Glenmark Life Science, and he wants to know if he should make fresh entry. So Glenmark Life Science, GLS. I don't remember the last time I assessed this stock, maybe never. Though Glenmark Pharma is a stock that I assess pretty frequently. But talking about GLS, I don't think GLS is very attractive for fresh entry because the momentum is clearly getting exhausted, right? So you always want to stay ahead of momentum, not behind it. Also, the stock is above the EMA, above the 100 EMA for sure. I don't think this is looking attractive. It's already given a failed attempt here, and the volume also is not looking very promising of a continuation in the rally. I always say that when you want to buy stocks in the market, don't go for stocks which are neither bullish, bearish, or looking bearish. Go for stocks which are looking outright bullish. Right? That small distinction or that small change in the way you look at things can really elevate your performance to some extent. Don't stand to compromise. Have a checklist, know what you want from the market or from your chart setup, and seek that or pursue that relentlessly and shamelessly. There's absolutely no rewards for compromising in the stock market with your own setup and your strategies. So Rajatji, this is a no-go from my end to you. And let's also look at CDSL for Ashish. Ashish is one of our very frequent Zoom registrars. Like I said, if you guys also want to connect with me on Zoom and interact with me during these lives, you're more than welcome to do so through my Telegram channel. Now, here I can see the stock gave a pretty attractive entry opportunity and then bounced back up. And then there was a support zone which did get respected. So this stock, CDSL, it moves up in spurts and bouts. But right now, I think it's already gone up and it's headed to the resistance trend line. So don't make the mistake of purchasing this now. I think it can give a correction and it can come back to retest this lower support trend line maybe sometime in the next month. Also, financial stocks, the financial services sector on the whole is not looking very attractive for fresh entry. So you want to avoid that. Wait for the stock to come back to maybe 2000 level to make fresh entries, but not right now, because this upside lacks volume participation. It also lacks strong momentum indications. So you don't want to get stuck at the top. So we've looked at that. Now Pratibha, she's joined us on Zoom. So is with us on YouTube and she's filled the stock request form. Has a question on Umang Dairies, and should she hold, should she sell 138? Pratibha, you seem to have made a pretty bad entry in the sense that you bought the stock after it had run up. That's usually not a very good practice in the market, because you see this spike that it gave, it exactly touched this resistance trend line, and now there is a good chance that the stock can absolutely correct back to its support level, and that's around 40% lower. My recommendation, strong recommendation to you, is to exit the stock, because I think it can come back to the level of 90.95 to retest the support. Right? So that's for you, Pratibha. I hope you've stayed with us to hear that advice. If not, don't worry, since you filled up the stock request form, my great team is anyways going to send you the message with my analysis. So that is another advantage why I urge the viewers to fill up the stock request form, that if you happen to drop out of the live session, but you filled up the stock request form during the session, then whatever analysis I do, the message with the session link will be sent to you on WhatsApp. You don't miss out on your answers. So we have Anmol, unique name there, asking for TC Limited. What is your view for the next week on the stock? Very short term. So let's first take an assessment of how the trend is unfolding, because that will give us a better sense of where the stock is currently versus its trajectory, its trend. And I think this stock is at a level where I wouldn't recommend fresh entry, because it's within its trajectory, it's closer to the resistance than to the support. But from a very short term perspective, as you've asked, I would suggest progressively go lower and lower in terms of the time frame for you. So I think let's see the 15-minute time frame. So 15-minute time frame is suggesting that this activity, it tried to break out above the resistance, but it didn't succeed very well. And this has a tendency of testing resistance and coming back down to the support. So the question is, from a short-term perspective, where is the support? Now, this is the support that I'm seeing, 842, but it seems like a pretty far off support. Did you indicate that you have a position? I suspect you have a position since you want the outlook for just 1 week into the future. But if you do have a position, then I think 820 is where your stop loss should be. Unfortunately, at this stage, I'm not able to give you a bigger target than 1080. And even the achievement of that target is a little bit, I'm not very sure of that. And I don't want to give you a very tight stop loss on this, but if I had to give you a smaller stop loss, I think even this range of highs makes for a good potential support. And since this has declined 10%, maybe maintain this level of 6.5 as your support level, because also this is where the strong breakout with strong volumes occurred. So if this entirely gets retraced, then that's really bad for the stock. So I think 1070, 1080 is your target, and around 893 is your stop loss for the stock. Okay, Rishikesh. So let's see, Zoom, any more inquiries? No. So members, please raise your hand if you post a question, because since I'm looking at the stock request form, I might not see your stock request on Zoom. So Rishikesh has a question on BPCL. So let's open BPCL. BPCL average cost price 114. All right. Awesome. See, based on what you've written, I strongly suggest you continue to hold on BPCL, because I think it's very attractive from long-term perspective, and you see this massive rally that is unfolded. If you can hold on to this, and especially since you've mentioned that your father is an employee with the company, I think the next 1 year looks very attractive for BPCL. So keep holding on. I am expecting, like, this looks like a flag pattern unfolding here, strong rally and then sideways consolidation. And it might take time to break out for sure, but it looks very attractive for the long term. So I am waiting for the stock to come back down to the level of 300 to purchase again for a target achievement as per this flat pattern, which is a pretty big target. For you, Rishikesh, I would say continue to hold BPC. So with that, we come to the end of this Market Outlook series. Thank you so much for being a great audience. If you like the session, do leave your comment, your thoughts, your feedback. This session recording will also be edited and posted on YouTube if you want to see a more concise version of this session. And I will see you in my Telegram channel. Don't forget to join me in the Trade with Kavita Telegram channel to be a part of my community and elevate your stock market practices one tiny little step, one tiny little quiz at a time. I am a big believer of continuous improvement, and I wish for everyone who's part of my community to also progress. Even if it's slow, it's a lot if you do it consistently over a long period of time. And that is also the secret to success, especially in the markets, that you go slow, you go steady, but you go consistently. So with that, I'll take off, and I will see you again next Wednesday in the Let's Get Technical series, where we bring one interesting stock and delve deep into its technical analysis from whatever parameters we can cover within a short period of 20 to 30 minutes. So I'll see you on Wednesday at 5 p.m., same place. And thank you so much for being a great audience. Namaste.